Hey guys, welcome back. Hope you had a good day in the market. It's April 2nd, Thursday. We're going to review 0-day options on SPY and the small account challenge. Another crazy few candles from news today. We're going to get into that. Short week. Tomorrow, market's closed. Happy Good Friday to you and happy Resurrection Day. Hope you have a good weekend. Stay safe. Stay back bright on Monday. Right, not early. 9:30 is not early. Come on. Let's see. Here's Eric's 30-minute chart. Big gap down, like 1.5%. It retested 5-day pre-market, and then of course that news came out and got close to testing 20-day. Hit the top of that green. Yeah, I need to be a little more nimble with my thought process. When all this volatility was going on, I'm just looking for same trade. I need to flip and see the IV, and I realize IV goes up, but I'm just not thinking about it at that point. So it's also looking at the 30-minute, seeing how it's retesting the top of that green, and yeah, you think it's just gonna keep going, but yeah, once you start to see some pullback, and it being the final day of the week and 20-day up there, it's only a credit spread up here would have been nice, because the IV pumped. We were like 45% there after this move. So to just sell some, you could even be out of the money a couple strikes to be a little safer and just let it decay. Because the decay was great today. All right, let's see some of these trades that went on. So before that news, it was a pretty straightforward day of sorts, kind of grindy, and then would break out to the upside without building much structure. One of those days. Got purple here for the bullish controlled selling in the morning. It broke out of it, and I think that was my first trade that I put right there. Yeah, put at 9:39. Wasn't my favorite because it was early and I wasn't too sure about this purple yet. But I did get one here. Let's see. Oh, that one was canceled. I got one. Yeah, 940. Actually got one on this candle. Is a little retrace. This was a nasty stop though, because this green candle. Ugh. Came here and I was gonna use purple for my stop. I just went woof. 139 I bought it for. 116 I sold it for. Got a bad slippage on the way out on that green candle. So that was a crappy way to start. 956 I canceled. Call. Yeah. Okay, so it came up. I saw it doing this. I wasn't too sure about this green yet. I think I had it in there. I think from maybe... No, I didn't have green in there. I did have... Yeah, I might have from right here. What was in there? It was just like a little less aggressive. Oh, well, breaking this red too to the upside. But I was kind of waiting for a cup to close. I think I did have green actually. So, but I wasn't too confident green yet, given there wasn't a lot of price action for me to develop confidence. So I didn't take it on that break, which I was fine with. I was looking maybe for a retrace after that cup had closed. It just kind of grinded up in that gray. However, I did have some confidence in this red for the bearish controlled buying. And when it broke above that, in this steeper gray buying channel, I was like, oh, I guess I could go long there. It's not much structure, but just as red for my support. And so I did. I opened a call. Well, I tried to open a call right here. Then by here it didn't fill. I'm like, I don't know. I was just lacking a little confidence still. And I wasn't a huge fan of it. And then it had this big dip down right there. And I'd already canceled my call. But this range, 948.5, 949. So that was over a point. I was like 1.5. Next trade I actually got a fill on was at 10:05. So charted this for the support. This was already here. through this red up here for the resistance, and we're just grinding up in that channel. This is bearish controlled, from my understanding, but of course it can break out to the upside. This green, so I charted a little different, then I changed the angle based on this right here, where the bullish controlled selling. Let's see, 10:05, I got a call. Oh yeah, I did. I caught that one. That's right. So I didn't get this one. It came up, hit that. I put that in for resistance. It came down. I'm like, all right, here's another chance for the retest. I was pretty scared on this one. I had a limit order, I think somewhere in here. It didn't fill. And then this thing, I was like, oh, and it filled. And then thankfully it wicked. I'm like, okay, phew. And then boom, one candle. 1 minute, one candle, one trade. That's all I needed today. But I didn't do that, of course. So I had green up here for potential for it to be a profit target as it could continue to just wedge in here. So I closed it about right here. I didn't wait till the top of that red. At that point, I didn't even have that red charted. So I exercised discipline and closed it right here. And that 1 point though, $1.27 to $1.67. So that was awesome. That's all I needed was that one trade. And then it came up a little further. I'm like, oh, why did I close it? Wait, hold on. And then I charted the red again, and we continued grinding up in that red. Did break up here. I got jumpy on that one. Yep, got a call. $1.22 on this little retest limit order. So basically, it's breaking. I'm putting a limit order, so sometimes it doesn't fill to the next candle. Sorry, 10.22. For $1.57, closed it. Next minute for $1.50, close it right here. Came back in, so yeah, a little false break there. And it continues to grind down, and then what do you know? It comes up, breaks, just like it happened here, and I got in, and here, and I got in, but that was false. And it breaks there, and then it's doing this. There's a little increased volume, just like back here, but that one didn't break. Nice full bodied up there. I'm like, all right, I don't even know if I put a limit order in there. I didn't put a limit order in there. I was waiting for it to come down a little bit further. Retest this, and I was going to put a limit. Oh, I was going to do it, and I didn't. That's okay. We had 652, 6 points in 3 minutes, 2 minutes. Wow. So, yeah, this was news again. More war news. I could have just jumped in on a market somewhere on this candle, not waited for it to close, or even waited for it to close and jumped, and then just went for a scale in if it retested. Thing is, it wasn't building liquidity here, which is always more of a risk. There was no structure here, so it's okay that I missed it. I mean, it was a news candle. Sometimes I can get into those. It was following everything, the criteria I needed to enter, as you saw here and here, here and here. I was just trying to be more disciplined and get it on a retrace, which is fine. Sometimes it works, sometimes it doesn't. Those contracts did go up like 600% though, which is crazy, and would have been a nice easy exit, or pretty easy, just close to the 20-day up there. Gap fill was like right here. Man, so didn't catch that one. I didn't have a whole lot of FOMO from it. I didn't have FOMO. I was a little upset though that I just market order there, but like fine. Next trade was, let's see, 22, 23, yeah. Next trade was a call. Oh, this was a cheeky little trade. It was a call at 10.53. So after it does this move, is what I'm saying. I need to look at the IV and see, okay, it's pumped. Probably not going to just stay elevated all day. It's like 45% near the money. I could open a call credit spread. Could have been pretty far out of the money, or even a put credit spread if I wanted. Didn't really matter. Given that we're kind of at the top of a big, huge wedge on the 30-minute, that's probably what I would do. This is the bearish play. So anyways, of course, I'm just chilling. I'm not trying to jump into anything up here. I mean, at this point, after that volatility, these candles are huge. 657.22, 654.84. So just the consolidation candles are huge. Tons of IV. I mean, you're getting wrecked if you're trying to trade in here for the most part. I was patient, waited on it, charted again. Had my gold from down here from selling. I had green from here and then red. So it broke this steepest white, which I charted from right there. Starts consolidating, wedging. And I chart green. So top of the wick is here, green up there. I've got red down here, right? So here's our wedge, the bottom. I mean, of course, there's a much bigger one at the very low of day, but from where it broke out is the bottom, and then top of green. So it starts doing this. I noticed it's starting to sell in this gold, so I charted that there. And then ideally I was waiting for it to retest here to get a call. But what I did was it was selling the gold. Once it broke the gold, I'm like, well, it might not come all the way here to retest. So it broke the gold and I jumped in a call right here for a break of gold. Then moved up, you know, to the upside. And I put red in here to manage my risk. Even though I wasn't sure if it was going to stick in this smaller wedge. Yo, dog, I heard you like wedges, so I put wedges in wedges. That's basically what we have here. Bigger wedge, a whole day. Smaller one here. But then look at the respect of this little one right here. This green and red right there. So, nice little bull flag. Anyways, I got a call right here, which is kind of a crazy trade for me. 10.53 for $1.71. And I just ran it up gray. Closed it at 10.57 for $1.93. Closed it on this candle. Let's see, where did it close on that? Oh, well, it was just a nice green candle. It's sitting in the top of the gray. I maybe had put in green at that point further down. I don't know. Oh, I was just scared. No, I'm sorry. I didn't close at the top. I just got scared, honestly. I was like, this is crazy in the wedge. It wasn't here. I closed it like right here. This candle was actually a little bit red. These contracts did do quite a bit better at the top of that candle. 655.11, 655. Yeah, that's almost 1 point, that candle. I closed it like here. I was like, I don't want to wait for it to break gray. So I closed it there. It rallied up a little further. So that was that little bounce trade, which, yeah, I mean, if you can manage your risk on it. And then I, of course, tried it again and it didn't work. Gave back most of it, I think, on this one. Well, this was for the breakout, I think. Yeah. So it's not breaking out because it's still in the wedge, and that's kind of the thing. I was like, oh, there's a smaller wedge. It's breaking out of that, but yeah, not so much. So I got a call here, and then I sold it here. But the slippage, like the IV crush, and the slippage was insane. 11.12 to 11.14 was $1.50 to $1.32 from here to here. And I looked at the contracts after I sold that. I'm like, how much did I lose there? I should have just been a couple pennies. I was like, what? It's 20 something cents or 18 cents. I'm like, dude, all right, I need to chill out. This is a premium seller's dream. Next one was, I waited a couple hours. 1:15. Did a call. Might be chilled out a bit. Oh yeah, I charted this gold or bronze potentially for a less aggressive bullish controlled selling. Wasn't sure about the green, but at this point it broke the gold, the bronze, and the green. I hadn't charted this blue one yet, which is bearish controlled buying. I hadn't charted that, so it broke here. Let's see, what did I say, 114 or no, yeah, 114 bought. Sorry, 112. Where are we? What? No. 115. 115. Okay. I gotta zoom in on that. Alright, there's a lot of little red lines. It's kind of annoying. I kept moving them around trying to figure out what's going on. And that's what happens when you try and chart too much in a wedge. It's like it's in a wedge. It's just it's not going to respect certain algos in the wedge. It's just in the wedge. 115 I bought for 69 cents, sold for 63 cents at 117 on this candle. I was using red to manage my risk, and I had two of them actually. Where's the other one? Sorry, I bought another one at 117. All right, bought one at 115, bought one at 117. 69 cents, 63 cents. That's right. That's right. Sold the first one for 67 cents at 118 on this candle. That's when I moved the red, I think, or put the red in. I was like, I actually need to reduce some risk. This isn't buying up very fast. I think it's still in a bigger wedge. And that's when I charted this gold, and I was like, all right, it might be in a bigger wedge here. Nope, I'm sorry, that was also a buy. Okay, because there were limits, yeah. So I bought 3 of these at this point. Yeah, 69 cents, 63 cents, 67 cents. All up here on the break of this gold and this green, and using red to manage. So it worked out all right. I mean, like, it was kind of a nasty grind, but the direction was right and I could manage my risk. Sold the first one for a profit at 71 cents. That was a market at 120. That was to reduce risk. That was on this candle. 126. Yeah, didn't catch those. I was looking for a move up to here, so I was like, this was just to reduce risk. This is a failed trade, and I'm just trying to get out some, and then I think I put a break even on them, and then I decided to do it manually at 130. I closed them both for 65 cents. So it was basically probably a break even trade. Yeah, on this candle. Once I broke that red, I'm like, I'm out. So still in the wedge there. And then at 149, I was in a put. So I quickly charted this. I was doing some other stuff. Support, flipping to resistance up here. It broke it right here, and so I decided to just trade it and use the gold for my stop, and it stopped me. So 149 to 150, I think, yeah, 48 cents to 40 cents right there. Unnecessary, but yeah, I don't know. I guess it's a bit of a gamble. I wasn't too sure about this, but as it did progress, it seems like this maybe was something. Just lacked continuation for last day of the week. Let's see. I say 149 to 150. And I waited a while. 252. It's a call. Right here, yeah. So breaking that final gold that I charted, I got a market on that one, and I closed it. Close it there? Yeah, no. Close it here, 256. Yeah, close it right there as it broke back in. It kind of wicked. Yeah, this I think was legitimate. I think it was just not buying up in anything strong. It was just still buying in this channel right here. So breaking this didn't matter a whole lot because it wasn't building liquidity with that. That's kind of what I'm thinking. 340. Okay, yeah. So came up, and I charted another gold for it to continue to build. Yep, you guessed it. Got caught right here. 340. I don't know if this gold is right, actually. I don't know. I think it was. It's still ultimately in a big wedge, so 340 to 340, 10 cents. Yeah, it's very cheap. 10 cents to, oh, I bought another one. Sorry, 10 cents, bought another one for 13. Oh, yeah, I remember this. Actually, this kind of screwed my day up right here. 10 cents, 13 cents, 12 cents, 13 cents, bottom at 340 and 341. And that was on the retest, and then it flushed through. Did a little fake out for the 10-minute move. Yeah. Sold them for 7 cents. So that was actually kind of a nasty loss just because I had so many, even though they were cheap. Sold them at 344 on. Oh, are you kidding me? I waited all the way till there. Yeah. I wanted to hold it, and I'm like, it would have been with this one, which, yeah, I don't know. That was kind of a silly place to stop out of it, honestly. Close enough to support. I should have held for that. But I didn't know because it broke out and then it retraced, so I wasn't too sure. Anyways, and it starts grinding back up, and then we get our 10-minute candle. Whoom. Breaks the gold. Like, up, of course. Those contracts would have been amazing on that candle. But I didn't let it get me down. I got in. I got back in. 350 on that candle. I did a market for 12 cents. I got a 656, thinking we might rip end of day, or at least hit a high of day or 20 day up there. So very cheap. Got one for 13 cents. Another one for 13 cents. Got three of them. Oh, 13, 12, and 13 bottom. 340 and 341. Sorry, 350. Wait. Oh wait, no, that's the one before. Sorry, just bought one at 350 and then bought one at 350. 12 cents, then 19 cents on this candle. And then it was just so slow and grindy. It was just like doing this thing. I'm like, oh man, we're in the 10 minutes now. Let's see, come on. I wanted to sell up here. I had my alert, everything. It grinds, it breaks my gray, which is pretty much what I had to manage it with. So I sold one, the first one for 20 cents, which was slightly green. I guess on that candle. And then this one for 16 cents on this candle. Why did I have it over there? Yeah. Because this was going red. Yeah, sometimes you get a move also in the last 5 minutes, which is what that was. That's a 5-minute candle. I didn't have the patience to wait for that thing, unfortunately, but that contract went. I mean, it's a pretty much a gamble end of day, so you just gotta be sized down. I sold it for 16 cents. That contract on that next candle. It went up to, I saw 40 cents. This is, once the market closed though, it changed the prices. This is saying like 30 cents. I think it went to 40 something cents. So 655, 35, 656. Yeah, I think it probably went to like 40 something cents. And then 25. Yeah, it would have been green. Would have actually made my day green. I ended up slightly red today, which I'm not too sad about it. It was a tricky day to trade if you didn't catch a big news candle and have a good excuse to just watch the market more or less. It was hard. They're the trades we just talked about. Yeah, this one sold for 20, and the last one I sold for 16 just because it wicked red. I mean they're flying around late in the day, especially out of the money. But yeah, that one went to 40, which would have put me just green. I was dancing around break even most of the day. Like I was green for a bit, red for a little bit, but ended a little more red. Total realized gain. Oh, it says negative 14. I think on my brokerage, because it says total realized down 19. I think that's maybe including commissions, because quite a bit of trades today. $6 worth? Or sorry, $5 worth? I don't know. Maybe. I don't think $5 worth. I'm not sure why it has that. Must be fees and stuff. Maybe $5 worth. It could be. It adds up on a brokerage that has commissions, but I think it's worth it over commission-free brokerages because I think you pay a lot more for the slippage and them front running you and payment for order flow and them making so much on the spreads, and every trade you get in, they're front running it and going against you. I think probably all brokerages are doing that to an extent, but it's a lot worse on commission-free brokerage. They don't have liquidity either. I mean, I trade on Webull too, and it's like, dude, I can't get out. It's crazy. And if I want a market order, I'm just last in line. Have a good weekend, guys. Sub up, like up, comment down. Happy money sticks around. See you on Monday. Peace out.